Hello everyone, it's Zola here. In today's videos, we're going to talk about 6 strategies that you can use to profit from high inflation. This is the Financial Metaverse. So just a quick disclaimer guys, although I'm licensed and trained to give financial advice in the country that I live in, I'm not your financial advisor. So the information I share in this video should only be understood for entertainment and informational purposes only and not construed as financial advice. So inflation is rising globally, influenced largely by increased government expenditure, lower interest rates, and pent-up demand for goods and services as a direct result of the COVID-19 pandemic. The US government's response to the COVID-19 pandemic under the CARES Act saw approximately 2.3 trillion US dollars injected into the US economy. So we have a lot of money chasing fewer goods and services, which is driving these prices upwards in a dramatic fashion. And as we know, there's a saying that goes around that when the US sneezes, the rest of the world catches a cold. And it's been true for most economies in the sense that inflation has been rising in most other economies, such as South Africa, where I'm from. In fact, it's very close to breaching the Reserve Bank ceiling of 6%, currently standing at around 5.5%. So clearly we're living in times where inflation could easily run away from us, and we need to devise strategies in order to protect ourselves financially and profit from it. So without further ado, let's share these 6 strategies. Strategy number 1, invest in the stock market. The stock market is historically known for outperforming inflation to a significant degree, particularly over the long term. But you need to be very specific in the sectors and the companies that you select in a high inflation environment. You want to be able to select sectors that actually profit from a high inflation environment and particular companies that can benefit from this environment. Warren Buffett taught that there are 2 fundamentals that we need to look at when selecting companies to invest in during a high inflation environment. 1, the company needs to be able to increase prices in line with inflation without experiencing a reduction in demand for their goods and services. And 2, they need to be able to scale their operations without a significant increase in capital expenditure. A good example of such sectors where companies typically do well in a high inflation environment would be those companies within the food sector, the technology sector, the building sector, and the energy sector. Okay. A good example of a company that can increase its prices without necessarily losing revenue would be Microsoft. Microsoft could easily increase its subscription for their software without losing customers because the cost of switching would be so high and the loss in terms of downtime to learn a new software would be too costly for any business, even for an individual. And you would much rather pay the increased subscription fee than try to switch to something cheaper or more affordable. And it's also because Microsoft is such a dominant player in their particular sector. Also, a company like Facebook, which could be able to scale without really spending a lot more money in terms of capital expenditure. They could easily be able to increase the amount of ads that they show on our feeds. For instance, if they're showing currently 2 or 3 feeds an hour, they could easily scale to 4 to 7 feeds an hour without spending much more money in terms of the capital expenditure. So these are examples of companies that you can look at and focus at specifically that could profit significantly during a high inflation environment. Strategy number 2, invest in precious metals. Fears of high inflation often bring renewed excitement and interest in precious metals such as gold and silver. They are historically renowned for being good inflation hedges, being able to maintain and even increase their value, especially during times where inflation is increasing significantly. Gold, for instance, has appreciated by roughly 52% over the past 5 years, while silver is appreciated by 49% over the same time span. You could be able to own these assets by buying them directly, such as buying gold bars if you are able to, And of course, these come with increased costs in terms of storage fees and so forth. Or you could buy gold coins such as Kruger rands and other type of gold coins that are exchangeable internationally. Or you could take a more hands-off approach by investing in exchange-traded funds that invest in gold or other precious metals. Strategy number 3, be very careful of loans with adjustable interest rates. When inflation hits up, the typical response of reserve banks globally will be to increase interest rates. So when interest rates go up, the cost of borrowing, particularly when you have an adjustable rate loan, also goes up. This is especially applicable for a mortgage loan or a vehicle finance. So if you have these types of loans, when the reserve banks announce an increase in the interest rates, the cost of that loan is going to increase as well. So it would be advisable to look at options where you can either fix your interest rates or hopefully negotiate a lower rate with your lender. Take this opportunity to explore the available options to you so that you are not caught napping when interest rate starts appreciating at an accelerated rate. Strategy number 4, cut as many expenses as you can. Now you would have noticed that the suggestions I've said previously involves spending money, but one of the most powerful and effective strategies to use during a high inflation environment is actually to scale down or cut some of the costs that we are currently incurring. One of the easiest places where you can cut costs is in your insurance payments. I have applied this principle myself where I was able to save as much as $30 a month, which is approximately 500 Rand a month on my car insurance premium. Just by simply shopping around and looking at different options, I was able to get a better deal, more cover, better value than my previous insurer. So take the opportunity to shop around and see if you can reduce those insurance premiums, whether it be your car, home content, building insurance, life, disability, severe illness, all those type of insurances, even your medical aid. You could look at options where you could save significantly. And look at how you can be wiser in terms of how you purchase food items, for instance. Instead of going to the shops physically, now options to shop online are so much easier. Particularly during the COVID-19 pandemic, companies have made it so easy to be able to do our grocery shopping and even clothing within the comforts of our own homes. And it makes it easier for us to avoid the temptation to buy things that we don't need due to the intense marketing pressure that we experience when we are actually inside a physical building. Strategy number 5, invest in Bitcoin. Gold has long been thought of as the go-to inflation hedge, but times have changed. We are now living in the fourth industrial revolution, characterized by the introduction of many revolutionary technologies which make life better, simpler, faster, and more efficient. These include technologies such as blockchain and cryptocurrencies such as Bitcoin. Bitcoin, being the largest and most established cryptocurrency of them all, has the markings of an excellent inflation hedge that's arguably better than gold. Bitcoin, of course, is much more volatile than gold, but has many characteristics which makes it a much better investment than gold. I'll explain this in more detail in another video as to why I think Bitcoin and perhaps other cryptocurrencies are a better inflation hedge than the traditional commodities such as gold and silver. So please subscribe and hit that notification bell so that you can be notified when I release that video. Strategy number 6, invest in yourself. When inflation is flaring up, as is the case currently, you can think of it in two ways. One is that prices are going up significantly. Two is that the value of your local currency is depreciating fairly significantly. So either way you look at it, you need to find a way to increase your earning capacity such that it at least keeps up with rising inflation. Investing in yourself is one of the most effective strategies to help you counter inflation, because when you increase your capacity to earn, you naturally are able to meet the demands of the rising prices. It is important, therefore, for you to consider which skill sets are in such demand that they will enable you to generate additional revenue and put you in a position where you can easily be advanced or promoted within your company, or be able to offer your services as a side hustle or as a freelancer. Please let me know if you found value in this video by liking, sharing, and commenting, just to let me know which strategy you thought could work best for you and the reasons why. Thank you for watching.